What's up? What's up, Wolfpack? What's up, Hex Freedom? Not your enemy. Shout out to you guys. TD, will you help me fund my cat's sweatshirt collection? Yeah, bro. DM me. All right. What's up, Our Dreams? KKR LSJ QRSW. I don't know. Crazy name. Hey, man, I want to introduce you guys to my buddy right here, Access Alive. I know he's a good trader because he's got the snapback, and that all good traders are rocking the snapback. Today, we're just going to talk about charts. No news, no craziness, no drama. We're just going to look at the charts and try to see where this market is going to go. We're going to try to keep the hex price above 7 cents with this stream. All right. So with
all
that,
right, we'll see. We got our work cut out for us, maybe, but maybe not. We'll see.
Yeah, let's take a look. The charts will tell us. So I do kind of want to get your take. I appreciate your work. I think you're a really good analyst, and I definitely want to hear your take on this, because usually I'm just talking into the ether. You know, like it's nice to have another TA guy on here. So basically, just a little recap. This right here is Bitcoin on the weekly chart. You can see these lines. I know it's a little busy, but these lines right here, you can see this is the parabola of Bitcoin. It goes all the way back to like July of 2017. It's held through Cozy 19, through the last bear market, and through the FTX dump, the FTX soggy bottom right here. Okay, we bounced off that, broke out of this trend line, which will be the bearabola, the bear market trend line, and we even confirmed it. We even came down here, confirmed it, and popped up. So that's exactly what you want to see, especially with a new high. That's gorgeous. It's beautiful. Now, a trend line within the trend line. All right, this is like Inception. All right, we're going in deep. So here's another trend line inside here. This would be the bull move that we have gotten in 2023. Yes, it doesn't cover all of this right here, not the first real impulse, but it gives you the gist of it. Okay, and we are barely clinging on to dear life for that, and it makes me think that we're going to roll over and have a little bit of a correction in the next couple of weeks. And I get that idea, especially from the S&P 500, because now that you can see it has its bearabola and it has its up impulse move right here, and it has already broken it and is a bit weaker, relatively speaking, to the bearabola as it is riding it down. Now, next week, we have a big news-driven week in the markets. We do have non-farm payrolls at the end of the week, but really the CPI is coming and the FOMC is coming. Now, today, we got the inflation numbers from Europe. They were hotter than expected. They were expecting 8.2%, and we actually got 8.5%. Now, I'm expecting the same thing to happen in the United States. Inflation coming in a little bit hotter. We even got some of the projections that like 32%, where is that page? 32% are saying priced in for a 50 basis point rate hike. So that would definitely cool off the markets and roll things over. We'd be looking for our first swing low, really. And if you're wondering, you know, like, why does this matter? Who cares about the S&P 500? I just like my shit coins. I feel the same way, but it is highly, highly correlated with the general markets. And it's a crystal ball into what's going to happen in crypto. And here is the example. Today, I've been nerding out and geeking out, and I was following the S&P 500. I'm following it very closely because if we break this trend line, we're going to get a massive move to the downside, and I want to be there to buy the dip. I have a bunch of dry powder since I sold 65K on this channel. I have dry powder, and I want to average into this market. And we'll get into my base case later on, but right now I just wanted to show you we did have a gap down open, went below into the bear market trend, but it popped out of here. Now, here's why the S&P 500 is actually super important. You can see at about 1:30 right here, we had a Federal Reserve chairman who doesn't vote say the word pause. That is literally, and it caused this huge rally, okay, in the S&P 500 when it was about to dump. Okay, so if we take a look at Bitcoin, you could see exactly at the same time, the same thing has happened right there. It's lockstep following, and even in Hex, you can see there's that little baby candle. You might need the James Webb telescope to see it, but it's right there at the same exact time, okay? So it is important to follow this. I know it can be a little bit dry sometimes, but the S&P 500 is very important, and it looks like this thing looks like it's about to roll over. And for me, that's okay because I'm definitely looking to accumulate as the 4-year cycle theory as my base case. This is an accumulation year. So I don't know. What do you think about that? And do you have a chart that you want to show?
Yeah, if you want to just pull up my thing, I got a couple things that comes to mind just off the top of my head. First here, I got that, you mentioned that we rallied on the word pause, and in this particular chart, anytime that the Fed pauses, it actually causes a short-term rally in the S&P. And then it's not until they actually pivot on rates is when you see the big crashes. And this goes back through time. Is this has gone back and worked since 2000. Anytime that you see this orange line, the Fed funds rate go flat, that's when the pause occurs. And that's usually like a 3 to 7 month time frame of either a rally or good news. Sentiment starts to change. But it's not until they flip on rates and they start to bring them back down as when you actually see the crash. And I think the thesis behind that is that smart money dumps assets at a high to buy them back with cheap borrowed dollars at the bottom, right? So like if you're sitting on an asset and it's up percentage wise, since your initial investment, and that the Fed's going to pivot on rates or that they broke something in the economy, and that you'll be able to borrow 5, 6, 7, 8 times more leverage at no cost to you for like basically free money, like we had back here after the great financial crisis, or like most recently around COVID. Then obviously you're going to sell off there's going to be a sell off in risk assets, and then that cheap money will be borrowed, and then because there's no interest to pay back on that, you can borrow that money at no cost to you, and then essentially that money flows back into the markets and creates a super giga rally. So something to keep in mind.
What couple of things that I'm very curious your take on is so this time I hate to say the words because like it's such a cringe thing, but this time is a little bit different because all of these times it looks like the Federal Reserve was definitely like, oh shit, the market looks shaky, it looks like we're gonna dump, we're gonna go ahead and cut rates, and so like we get the oh shit moment, we're cresting in the market, and then it seems like they start pausing a little bit. Then right here, you can see it goes down. Once we start crashing, they start cutting rates to make money cheap again, to stimulate the economy, basically, right? So people borrow money, they hire, they expand businesses, they build facilities, right? It's good for the economy. So this time we've been dumping into this thing as they have to raise rates because inflation is a massive problem. So do you think that it could be they're waiting for something to snap first this time? Like they're going to keep raising rates and trying to tame inflation. When something breaks, then they're going to cut rates. Like it's not the rate cut that is affecting the crash, but actually vice versa.
Essentially, like to me, like the fundamental reason what breaks or why it breaks or how it breaks doesn't necessarily matter as much to me when my analysis, because my general thesis is like looking for maximum downside across the S&P. And like if I pull up let's pull up a chart here. We'll pull up the S&P. All right. So my thinking is like if this is anything like a major a major crash going back to like perhaps like back here in 2008, let's say, where they broke something in the economy, or you could even use COVID as an example, right? Even if you just take this fractal out, when you did get above that bear trend resistance, like for example here, and then we do come back down for like a giga crash, this is okay with me because this is a rally, or this is a sell off to buy essentially, right? If you were to see something like this, you would get a clean double bottom on that inflation numbers and just like people's inability to pay back debt and stuff. However, I do know that they were going to raise the debt ceiling, which means money printing is sitting on the sidelines waiting to be tapped. We just haven't gotten that yet. And so I tend to think that this isn't really the play that's going to happen, but this would be like the ideal play for somebody that still has dry powder and that's sitting on the sidelines, because in the case of like cryptocurrency, like as long as you have that powder, you should anticipate a downward move, but not like rely on it completely. But this would have you bottoming sometime by November. So that's kind of the time frame I'm looking at for if you don't get downside in the S&P by November, like you gotta, like every single month that goes by, you got to be assessing what's going on. And by May or June, we should know, generally what direction the market's going to choose from this point. I think this is personally a healthy back test of this level. And we'll see, man, because when I just look at the M1 money stock and I look at like how much money has come into the circulating supply here, you know, you look at the growth trend of money since 1970s, like, you know, you had a pause sometime in like the mid 90s, and then that slow growth of new money coming to the system stopped right around 08 when they enforced quantitative easing, right? And that's when you saw this growth trend curve back up. And even though they were printing it at like unprecedented rates, for some reason we still got to that moment where the economy snapped again, and you know, on a world, you know, pandemic event or whatever. And now all this money has been printed. And I guess my theory is that, you know, prices are going to stay high no matter what, because you're not going to kill demand fully across the globe in an economy where there's more people every day and more access to resources every day. And this is kind of what cryptocurrency is doing, is it's redistributing resources from one central power into the hands of the many across the globe. And so I think we're seeing like a technological restructuring of the entire global economy. And so I don't think these cycles are going to play out the way that anybody thinks, you know. And I always like to think about like the basics in the charts. Like, we have to look at Bitcoin, we have to see what it's done before and see how it's acting to really rely just on the chart to know like what's going to happen going forward. And I do want to bring up this chart here, which is basically like different correlations of the S&P from different time frames. And so you can see like in each one of these time frames, we'll start in the upper left quadrant. That's like the 3-month correlation between the S&P and itself from 1965. This is the most correlated it is across a 3-month time frame, is in 1965. And this obviously had a choppy sideways move for about, looks like it's roughly 2 to 3 months or something, if I'm reading this data right. And then you go to like a 6-month correlation. And then it seems like it's more like 1944, where there is going to be that little bit of a spill, but it'll be short-lived, and then we'll get the rally, right? Because either they turn on the money printer or whatever fundamental, it doesn't matter to me, because I'm just a net buyer of this stuff that is limited in amount and has the most pump potential. So any downside to me is bullish, and that's partly why I think the downside is going to be limited in a world where they've printed $10 trillion out of thin air just a couple of years ago, and they've only been able to pull $1 trillion back out of the entire M1 money supply. That money is still sitting in the private and public sector all over. There's more dollars now than there's ever been before, and it's in everybody's pockets. And the guy who gets hurt the worst is just the everyday Joe, who doesn't have anything, and they're just, you know, but they're also the ones that don't affect the chart either, right? Mm-hmm. So highest 1-year correlation, you know, you go back to like 2009, like that's just saying up, but the most highest correlation here is actually 1947, and this would imply that, you know, we do have a rocky road ahead of us, right? This is saying that there is some downside, but you won't break those lows. You'll just go down to meet those lows one more time, or potentially 2 more times before eventually rallying out. But this would be an ultimate accumulation range, right, across your favorite stuff. So it's all bullish to me, right? Acquire money and bring it into the assets you love, the ones that you believe in, and the ones that are backed by immutable code and all these other principles that I always speak about.
Yeah, I actually agree with that. I think that the gap between the haves and the have-nots is going to get way bigger, and the people who own assets are going to keep up, and the people who don't have assets going into this inflationary time are the ones that are going to be locked out. The barrier to entry is going to be much, much higher. You know, just like when I was trying to buy a house, I mean, the markets just kept climbing and climbing and climbing. If I would have bought a house, if I would have built this house that I built, you know, 3-4 years ago, I would have paid hundreds of thousands less. And I don't see it getting a whole lot better. And I do agree with how much money has been printed, with all this money circulating in the real economy right now. It just goes to show, like, if you take a look at the DAX, which is the top companies in Germany, and we look at it on not the minute chart, let's go look at the DAX. There's so much money. The inflation is still 8.5% in Germany. And you can see that their market's almost at an all-time high right here. So think of it as their like S&P, the stocks 500 is the top 500. It's an index of the top 500 stocks in the EU. And I mean, it's almost at ATH right now. It's just a lot of money circulating right now. And I do agree with you that people are on the sidelines waiting to buy. Yeah. They're so anxious that when a Fed governor says the word pause, and it's not even like an official speech or anything like that, just to a reporter, the market goes apeshit. Like people are anxious. There's a lot of money in the sidelines. However, I do think that we are going to roll over from this. I really do think that Bitcoin is going to come back down over here and test like the 21.7 with the 200 exponential on the daily.
I'd love to make a case for that. I'd love to make a case for that for you. And I also want to say to your comments about those other indices, we have to ask ourselves the question: is the DAX and that in the European index, are those leading indicators of where the market's headed, or are they lagging indicators, right? Because if they're leading indicators, and that means that the S&P has upside, short term. If they're lagging indicators, then perhaps it means that they have yet to come down, right? And then the other thing that I posed the question before we started was, if they're lagging indicators, are people going to take a counter trade in that and leave those indices and come into something that's more discounted, such as like the S&P after another breakdown, right? So some things to think about.
Yeah, and I believe they're lagging just for the fact that their interest rates are 3.5%. Ours yesterday came in, they were like 4.75, so because they're in ranges, but so as they increase rates, which they're going to have to, because they came in hotter than expected. So I think I think they're just behind and they're going to do what's going on.
So double top for those indexes under those conditions. And I would agree with that.
Yeah, like a lower high, probably, in my opinion. Yeah, I don't want to be like the person that's negative and has a negative.
No, I would.
But I just think that
I don't think that's what I just to compliment you. I don't think that you calling for downside is a negative at all. I think it's a bullish thing, is what I'm trying to impart on people. Is that any kind of pullback from here is actually bullish, because if it were to just go straight up, we'd be looking for a double top in the S&P. If you actually do get some downside, smart money can acquire the assets, and then those guys aren't going to just sell them. Like unlike the market, if the market retail just comes in and rips the market higher, they're looking to take profit, right? So kind of some way to think about it. And another thing, if you want to pull up my screen here just for a second, like this is a tweet by Lynn Alden, and she said that, and she basically shows how in 2008 the U.S. banking system had $23 of deposits for every $1 of cash, right? So it was so over leveraged in 08. And if you compare that to where we're at now, I mean, it's just obvious to me that the central banks at least are fine, right? So there's no like imminent black swan as far as like leverage is concerned at a central banking level, and this is due to a function of money printing. So it lessens the chance of a massive crash.
Yeah, I honestly don't think that we're gonna like have some sort of great financial crisis or anything like that. I just think that we're gonna put in a swing low, and that's 100% a buy.
Bullish.
Yeah. So, and what are the coins that I see? There's a flag in the background. We all love Hex over here. But is there, before we hop into that, is there anything else that you're really bullish on? Is there any NFTs that you like? Is there any other coins?
You're going to hate me because, I mean, I do look at other coins, and we can talk about those in a minute. But just to kind of answer your question, I really don't think that there's another cryptocurrency that's as important to cryptocurrency or is going to pump as hard in the short term as Hex. And I think it's showing a negative correlation from the rest of the market. And I can show that here. Shout out to Wales Only. We used to stream together. He put up his new chart set today. And inside of here, we'll pull up a chart that basically shows Hex's correlation to, if I can find it, let's see. This is super important for everyone to understand. So basically, in the entire history of Hex does the same thing as Bitcoin and Ethereum, only 19% of the time and 17% of the time, respectively. And so, like it like most of the crypto market, for example, if I pull up like what Bitcoin and ETH do to each other, it's usually like 90% of the time. Ethereum is just copycatting whatever Bitcoin's doing. And we know this because all of the liquidity is tied together. If you look at a 1 year here, you can see that Ethereum is doing the same thing as Bitcoin over the 1 year time frame 90% of the time. So 90% of the time, if Bitcoin goes up, ETH goes up. If Bitcoin goes down, ETH goes down. Versus like a more loosely correlated Hex, which is doing it 59 or 63% of the time. But over a 7-day moving period now, Hex has been negatively correlated to both of those assets, which means that if Bitcoin goes up, Hex goes down. If Hex goes down, Bitcoin goes up. And so it's actually starting to decouple away from the traditional crypto market and do its own thing. And it's a function of low liquidity and kind of like the liquidity squeeze that's going on in Hex. And we
Yeah,
can take a
big
look at
time.
that. Yeah.
Yeah, man. I see that there's actually a little bit of a desert of liquidity. So we're like, if there's any kind of hype at all, it's going to slip up to 10 cents very quickly. Just that
Mhm.
little desert right there,
Mhm.
that
So
gap. And
so there's basically for those guys that have been following me for a while now. I apologize, I'm not looking at the chat that much. I'll pull that back up. So feel free to just post any comments you have in here if you're new to this stuff. But because I know a lot of times people look at liquidity for the first time and they don't really understand what's going on. But essentially, this red line is where the price is at. And if the price goes to the right, price is going up, and if the price goes to the left, price is going down. So all this liquidity on the Hex USDC pair, on the 1% fee pair, this is all acting as bid support, and it's preventing the price from going down because there's a lot of FOMO and people that got left behind on price along, basically from thinking we were going to go sub penny, or we were going to break down from that 3.2 cent level, and that never happened. And we had such a rapid rise out of those price levels that now the liquidity squeeze is on. And as of yesterday, there was only like 35 million hex for sale on the market. And so the issue that we're having is like the price keeps getting pushed up to the edge of the liquidity. A big whale steps in here and puts in 100 grand market order, and it slips the price up 5, 10, 15% against them, moving the price up. And then they get less hex. So they don't really want to just buy big loads. They just want to let the price sink back into the liquidity range and buy back up to the edge. Let the price sink back down to the liquidity range and then buy back up to the edge. And this is just one of the 4 major pools. So as you can see here, this is the 0.3% pool, and between 3.2 cents and 5.4 cents, you have just a ludicrous amount, almost $6 million of liquidity sitting here for whales to accumulate. If the price does end up breaking back down into this range, this is where large players are going to look to purchase. And I know that's for a fact because on Sunday I streamed live and we had a whale step in and do 1,000 ETH market buy right here on this, and it pushed the price right back out down here to this high risk, low liquidity zone. And that's just 2 of the major pairs, right? So I'm showing you the main pairs, right? This is another pair. This is the Ethereum pair. Again, you're at the same situation where the price is up against the rest of the liquidity. Price gets out here, it's starting to move pretty quickly, right? And so, sellers don't want to take the hit and slippage. They want a higher price, so they're not really selling. And buyers don't really want to push the price up because they want to buy more for their money. So they're waiting for it to come back down. And you're basically you're in this game of chicken where who's going to take the first stab, right? And again, on this pair, it's the Hex Wheat 0.3% pair. You can see there's just so much liquidity acting as bid support right now. And if we look at the actual chart, you can see that there's a bit of a battle going on here near the highs around that bear trend line. And if we look at it on a longer time frame, you can see here how we just completely came back down, back tested the global downtrend resistance, and now we've busted right off that. You compare it against ETH, and I mean, it just looks amazing. Like there's 888 buys to 394 sells. And even though there's a $300,000 more sell volume coming in, that's just coming down on price because of a function of that low liquidity. And it's just falling back into the thicker liquidity now at these price ranges.
yeah, I was actually also looking at that. I also have this line right here that I drew. It's called like the mean average. It doesn't fit perfectly, but in a capitulation market cycle, typically it is over. Like despair will be down here, and when it gets above its mean average right there and find some support, typically it's full bull, like it's fully bullish. And it's crazy because it really does reject right here. And I'm fully confident that it's going to break through this. And I mean, there's really no bear case mid to long term once we're above this like mean average line right here.
I agree, and I actually can support that too. I have a similar setup here where you can see I have
Let me
this
turn it back on here.
Yep, this is basically like the fair value channel, and it's basically going back to the big payday. If you were around for those days, essentially what happened was there was a huge run up in price from 0.3 of a cent all the way up to 1.5 cents in a matter of like 4 or 5 weeks. And then after that, 30% more interest got paid out to those guys who staked during that one day. And that's when you saw this 86% drop in price, is because people took profit on all this extra money that was free minted, right, for stakers. And what was miraculous about this event was the price recovered in just 5 weeks back to a new all-time high of 2 cents. So this is basically where fair value started, because all of the price action that came before that was actually just in anticipation of an excitement around a new coin, and then the fact that you could trade it for the first time on Uniswap. And that gave a lot of fundamental potential because this was the coin that couldn't be leveraged, shorted, or be manipulated by paper trading or anything. And so it gave Hex rocket fuel in the early days. So I like to kind of use this as my fair value channel. As you can see here, we've had a nice clean bounce off the midline here. It's a little bit of a different trend line than you picked. I just basically picked the low before the big payday run up as my base, because we had basically like a triple bottom at that level. So I figured it was a significant enough level at roughly 0.2 of a cent. You did come back down wick below it on the big payday, but that was kind of an anomalous event. And so I think because it recovered and actually held that next weekly candle above, that's basically why I chose that level. And then I went to our new bear market low. And so and then I use these tops here from big payday and then the 2 cent wick and then the this little like breakout, fake out, and then go as my like basically 1, 2, 3, 4 connector points here, right? Most recently back in August of last year. So this is fair value. I think, Hex is ready to go test this, the upper edge of this range. And the reason why I think so is because you do have these things happening, like where there's this new Genesis whale who pumped 1,000 ETH in at that 6.2 cent, or I'm sorry, I think it was 6.2 cent range. And he's still sitting on like $15 million of ETH, and he staked it till May. Well, if he sees the yield in Hex and he understands like how much money can be created, through this mechanism, perhaps he, along with other Ethereum Genesis whales, will come together and understand like the potential of the system to basically provide them an infinite yield. And so they'd be happy to get the price up to all-time highs and let retail take it from there, essentially, especially with the fundamentals. Yeah.
Do you think this is another Ethereum Genesis whale, or do you think that this is a daughter address from the God whale himself?
Because there's different takes on that. Like Silver the Antidote does a lot of the chain analysis for me, and he says that if initially he's like, well, he thinks it could be tied, but he's not sure. And then there's other people that are saying that it's a whole new address that has no history tied. So I'll leave that up for debate.
It'd be cool if like, I mean, Occam's razor says usually it's the simplest answer is the correct one. So like, in my opinion, is there 2 Genesis whales, God whales in Hex, or is it just like another address from him? Because we all have, like, I have multiple Hex addresses. I always kind of spread things out for security and safety and stuff. To me, I think it's the same one, but either way, it's freaking awesome, right? Hex is unique in that way is that typically all the projects that I've been in, since 2017, there has never been a good actor whale that's propping it up and saving it. Not that I've known of anyway, ever since this whole ride, like the God whale has been buying, hasn't sold. Now there might be a God whale 2.0. We don't know.
This is what we, and Silver did backtrack those statements and said that he actually thinks it is a new whale. And that these guys swim in the same circles. So if one or two figures it out, they're going to be talking to other people. And think of it this way too. All right, if you're holding on to like 10,000 ETH, right? And you're expecting next cycle, maybe you get an $8,000, $10,000 push on Ethereum before gas just gets out of control and you peak out in the bull run. Maybe you get $16,000 ETH. But the gains from, $1,500 to $8,000 is like what, a 4 or 5x versus Hex, where you have potential to see hundreds or thousands of X plus a stock split essentially in the PulseChain copy, and getting all that liquidity and leverage on that side of the bridge before the bridge goes live. I mean, there's just so many things that's playing into this that I think people need to think about when they're considering what Hex can do. And so I've made a case over the last few days of like comparing this more to like Bitcoin in its early days, like its second cycle, if you want to get into that.
Yeah, we'll get into that cycle theory a little bit, but also, with low liquidity and the craziness of an early, like you said, it's early, there's also a lot more risk associated with that. So as long as you have a good risk appetite, this thing could still swing very wildly. I mean, we were down just 97%, but I agree with you that the trajectory is definitely up. But before we move on, I definitely want to talk about price targets because everybody's trying to buy more Hex right now. You're like, I don't know anybody that's trying to sell. Everybody I talk to is like, dude, where should I buy? So let's just look at a little bit of like price targets for people. I use the Fibonacci pivots. They typically work pretty good. You can see us gaining support here on the R1. I always like the Occam razors thing. I always want to do the most simplest trading strategy with least points of failure. Seems to be better for me. All right. So like I like to look at the pivots. You can even see the primary pivot right here is pretty close to lining up with this little ascending triangle breakout right over here. So The 21 exponential moving average, this is relevant. You can see that it touched here. It's my own trading style. I trade the 21. You can see it gain support here, pop up, gain support here, pop up. So for me, anywhere between the 21 exponential moving average crossing that bear market trend line right there, juicy right there. That's like, you know, confluence in multiple indicators is definitely an interesting point for me. You also have the VPVR right here. You have like a nice little volume node. So I would say like 5.8 cents, which it's all burned into our brains by now because it was over there for a while. Between 5.8 cents and the 200 EMA 4.4 cents. And if you're lucky, 3.5, 3.7, you might want to front run that a little bit because I think a lot of people would buy 3.5. So like 3.8, between 3.8 and the bear market trend line right here and 5.8 is a buy. If you're sitting on the sidelines, if you missed it, or if you just want to add to your position like I do, not looking to sell anything. I think the real FOMO is going to start once the V3 is live. Richie's on the throne. He's making videos. You know, we're on Ivan on Tech. We got like, dude, you missed PulseChain, you missed PulseX. Okay, buy Hex and then use your P Hex to trade for PulseChain. You know what I mean? So like that's your on ramp. I think this thing could like bust out crazy and just like melt faces. And you know how this space is. You know, if something's pumping, it gets the eyes of the whole crypto community. You know, so even the haters might be looking. Not a whole lot of Hex available, not a whole lot of liquidity. This thing could do some crazy ass shit, you know. So just to reiterate one more time, like, you know, 5.8 to 3.8 is a buy in my opinion. It'd be lucky. So far, there hasn't really been any pullbacks, but with the macro sentiment that we were talking about, you know, as I'm saying that the S&P is just ripping.
Yeah.
But with the macro sentiment, you know, kind of like rolled over and touching the trend line here with the CPI, with all this stuff, if all this shit flushes, it may give you a buying opportunity to buy. So look at it like that. If the CPI comes back crazy, if the Fed is being hawkish and it sinks the market, buy. You know, that's what I'm not telling you what to do. I'm just telling you what I'm going to do and the ranges that I'm interested in Hex. But I'm going to give you the screen share so you can show me your targets if you would like to.
Yeah. So I'm basically piggybacking off what you said, but this is the liquidity, right? This is that 3.8 cent level. You have roughly $360,000 of bid support here, right? So somebody is going to take that, but most likely it'll get front ran somewhere here around that 4.2 level because you got another roughly 220,000 bucks here of liquidity. But yeah, as soon as you come down into this range, you're going to get some bid support, and limit orders are going to be getting hit all the way down through, and big buyers are going to come in heavy between that 4.2 and 5.4 cent. If you did get a big flush, I know there was an account with 118 million liquid right now that was a potential threat. If they were to sell like in 118 million in one go, let's kind of see what that would look like and where you could get price.
Yeah, man, that's crazy how the how there's confluence between the liquidity pools and also the charts. It's kind of mind blowing. Like that's why I always say like these charts they're not perfect, but they rhyme, and that's like the poetry of TA. You know, like all this shit is kind of lining up. It's really showing you where you can buy. You know what I mean?
This is gonna blow your mind. If the dude was to dump 118 million in one go, it would only drop the price 17%, and that's really the major wallet right now that we're watching.
So dropping where's that put us? Because
18%.
Yeah, what's that put us at a price here? Let me look.
Let's see here. We got price target of roughly 5.9. So you'd hold that 6 cent level. But that's not accounting for any limit orders that are sitting behind price right now, and we're right above the trend too. So again, guys, I've been saying this for weeks. Is like, you know, don't get left behind. So if you don't mind, I'm just we'll go through some cycle theory on Bitcoin and why I think the bottom's in. And I'm going to go to this is my website, accesslive.com, for if you guys haven't seen it. I did do a post here a couple weeks ago about this very thing. I got to figure out which one it is. Because I do go in here, for example, you can see that the liquidity in the pools has completely been depleted. So the top panel is Ethereum, middle panel is Hex, and bottom panel is USDC. And you can see that both the top and bottom panels of ETH and USDC, there's been an exponential increase in those coins coming into the pools, but you've seen an exponential decrease in the amount of Hex in the pools. So there used to be, just in January 1st of this year, there was 300 million Hex in the pools. That's all been pulled off by market makers and liquidity providers, creating this shortage. And there's been a huge short squeeze going on, of of hex liquidity, and this is what's causing people to have to buy higher, is because there's just nothing for sale, and you're going to need to entice these guys with 100 million hex to sell. And even with a one button press market dump, who's going to take the 18% slippage? Are they happy with the money? They might be happy with that money. They might not want to sell it all in one go. So eventually this is just going to create buying opportunities, because buyers want the best price, but they want to buy it where there's the least slippage, right? So it's basically prices getting squeezed, right? And then just a little fun piece is like, well, what if Hex did like a GameStop that would look something like this, and you could get ludicrous prices, like we're talking over $10 Hex by end of year, right? Now, do I think that's likely? Probably not, but just it's kind of fun to put that chart over that like that and kind of see the fractal. And on this low liquidity, if you had real user adoption, we're talking like Metcalfe's law type stuff, where you double the amount of users over the next 6 months from maybe like, let's say, 100,000 stakers to 200,000 stakers, will you exponentially increase the value of the network? And so you could see like a 10x increase in price off those lows.
Yeah, I saw earlier today, I saw a post and I was kind of digging for it, but I can't find it. But there's on whatever website that KDP always looks at, it was saying that Hex has 315,000 daily users. I don't know, like, that is insane. I figured like the Hex community was like 50-60,000 people or something like that.
Yeah.
But no, man, I mean, the Hex community is a lot bigger than I thought. And even in I'm going to El Salvador just for a short holiday, and I want to check it out, like maybe a possible retirement or something, blow some Bitcoin, right? So I'm going, and there's a bunch of Hexicans that I'm meeting there. Like there's 2 Hexicans. I won't name who they are, obviously, but that live there. And then a third one coming to visit. And it's like, dude, that's crazy. No matter where I go, a couple months ago, I was in Thailand, and there was Hexicans there that like lived there. And we just met up and partied and stuff like that.
Badass, bro.
It's a lot
They're
bigger.
all over, dude.
It's a lot bigger than people expect. So.
Yeah. And I know I launched my website in beginning of February this year, and I have members joining from all over the globe. And so it's kind of hard to schedule all this stuff because they are really everywhere. But it's awesome, though. It's awesome to see that global support. And then to the point about new holders, like across the bear market, shout out to Whales Only for providing this chart. Since the bear market, basically, you've had an increase of 72,000 holders, right? So that's pretty incredible.
Yeah. Going back to the cycle theory,
mm-hmm.
Is there anything else that you want to go on that?
Yes, we're going to go into that. We're going to go into that right now. This is perfect time to pivot into this. So
to the cycle theory.
So this was my most recent blog post. Okay. So I said crypto spring has arrived. And the reason why I think it has arrived is I have 3 charts that I'm going to show you guys. That's going to break this down for you. So basically this chart here is the golden ratio chart, and the yellow line on the bottom is actually it's the 350-day moving average. And as you can see, every time that the Bitcoin price in black comes up to test the 350-day, within 6 months it recovers and heads to the green band in all cases. Okay, so I'm going to pull up that chart now live for you guys and show you exactly why I think the Bitcoin bottom's in. Let's check it out. So, and this is all on a really bullish S&P right now too, mind you. So check this out. The Bitcoin price comes up, it tests the 350-day moving average in 2012 off the bear market low. It breaks back down, spends 5 months below, comes up to test it again, breaks through, heads up to the green band, and then shortly thereafter goes and meets and exceeds the red band. Fast forward to 2015, price breaks down to bear market bottom, does a double bottom, comes up to try to test the 350-day, falls just short of it, waits about 4.5 months, comes up, tests it, breaks right through, goes to the green band, and you're off to the races for the bull run. 2018, bear market low, comes up to test, consolidates below the 350-day for about 30 days, breaks right through, goes up to test the green, then it goes right up to the red, meets and exceeds that. COVID crash, you had this anomalous event, breaks down below, and then within 45 days, you come up and you hold the 350-day as support, and that starts the bull market run. So where are we at now? We're looking at it like we're basically coming up. We're up where we had our bear market bottom, double bottom. And you're coming up to test the 350-day. You're consolidating below it. And so then it asks the question, well, what's going to happen? Are we going to break down for 5 months, or are we going to break right through and go to the green line? Well, if you break through, 39,000 is the target. If you break down, maybe you come back down and test the lows. Maybe you don't quite get there. Maybe the demand's increasing, as crypto spring is occurring, the markets are repositioning, the dollar is weakening. People are looking to put their money into something at the best price. But the problem is everybody's doing it at the same time. And with all those monies that got printed in 2020, everyone's got fresh powder. Like anyone who can move the chart has fresh powder. They're ready. They sold the top, and everyone's waiting for lower prices. So my thesis here is that even if you do get a breakdown on this to test maybe 18.5 or 20K, that is a dip to buy. And that's really just a last second capitulation on some breakdown in the macro markets that will easily be eaten up.
Okay, absolutely agree with that. And I actually have a little sloppier version, but if you bear with some of the chaos that's on my chart, I can actually support that. I also think the bottom is in. I don't think we're completely out of the woods. I'm expecting a lot of volatility, especially in the next couple of weeks. Volatility is buying opportunities in my book, and we'll get into that why. But if we take a look at this, we've been calling this the parabola on this channel, this bear market trend line, which we broke and tested and back tested and set a new high. Very, very bullish. If we look back, we did the same thing right here on the 2018, 2019 bear market, which I had the privilege of the misery of going through that. But you can see when we broke out of that right here, we popped through, ran up, set new all-time highs. And if we go back to 2015, you can see that parabola, it broke through and went and set all-time highs. So the moral of my story is don't sell right here, okay? Because you're going to miss this stuff. So right now is definitely the time to accumulate. And I want to just give you my cycle theory. This is actually not my chart, but this is the best one that I've seen. I've looked at all of them, but this is my absolute favorite one. It's the November 28th cycle theory chart. And how it works is the red year, the number one is the ATH year. You go to ATH, you can see we had that November 28th, 2013. Don't get hung up on that because it's showing you by year by November 28th as the year. Okay. So it's not January 1st, but yeah, you can see we had the ATH here. Then we went into the bear market year, which would be the 2. Then we had the green, which is the accumulation year. And you can see all of these tops and bottoms. They're pretty damn close. Remember, it's not at 100%, but it's damn close. And then 4 is the preparation year. You can see we had a nice pump there. And then we go back to the ATH year, which goes back to the correction year with the bear market year. So now you can see this really lined up right here. We had November it's not quite right, but like January is when we had a really big pop and breakout. But this is pretty damn close. So I'm accumulating this year. I'm going to buy as much as I can, keep buying dips, keep up with the market so I can scoop up cheap as much as I can. And I'm preparing for us to probably take out the all-time high, by November 2028, I think. And by 2025 in November, I believe that's going to most likely be the top. I mean, it has been close. And the trend is your friend until the end of the trend, So I'm going to take the data points that I have and plan accordingly, because otherwise you're just, guessing. So this is the best, most informed guess that I can think of. And I believe we're going to be accumulating. I think we're going to end the year higher. But with the craziness of the inflation and the Fed hikes and all this stuff and all the economy coming back to life and coming back online, I think there's going to be some crazy volatility and that shows some juicy abilities to buy. So long story short, don't sell here. Don't be selling right there when shit starts turning bullish. It's the parabola right here. Don't be selling here. Just be accumulating and buying. DCA, you know what I mean? Be smart, but don't think that we're just going to go straight to the moon either. I think there's going to be some craziness, some crazy melt ups and meltdowns on the way. And, that's the cool part about this space. There's never a dull moment, especially in the hex space. It's always exciting. But yeah, let me, would you like screen share?
Yeah, we'll just, we'll go back and we'll look at, that was a great chart. I did see that on Twitter yesterday. And I think that was a really good chart to show, it's pretty much as simple as it could be, right? Yearly, and it's ran perfectly up till now. And so, a lot of these price moves, it's a function of this underlying mining economy. So long before I was ever in cryptocurrency from a market side of things, I was actually a Bitcoin miner, an Ethereum miner, and I built out a data center and did that for about 4 years before selling that at the top. And that was the first top, 64,000 top in May of 21. But so then I take my analysis a step further, knowing like the cost to produce and the equipment and the ROIs and investments and the market psychology behind that whole process that's really driving cryptocurrency forward. And when you look at this graph here, it's the Bitcoin price it's rainbow colored, because every time you get into this blue color, that means you're about 400 days out until the halving, right? And what the halving is it's when the amount of newly mined Bitcoin inflation gets cut in half. So that means that a miner's revenue is cut in half. That means there's a shortage of new Bitcoins coming onto the market because there's just less for sale, because there's less being mined, right? And so what happens is, when we're in the green zones, parabolic tops, Bitcoin miners sell and go short because they're anticipating the bottom, where they can then reaccumulate coins with way more coins with their profits, and then front run that halving event where coins become much more scarce, right? So here we are again, we're 400 days out until the next halving, and it's like clockwork, right? It's just like people, large investors and miners are coming back in. They're accumulating up the supply in anticipation of that halving.
Yeah. Absolutely. So we're running. We got about 15 minutes left. So, okay. You got something here? I don't want to cut you off.
It's just more of the same. It reinforces the point. The orange line is Bitcoin inflation, but it's the inflation in dollar terms based on the price. So every time that the dollar price of newly mined Bitcoins comes down into the green band, it bottoms, and then you get a test of the blue line, the 1.0. If the dollar amount of newly mined Bitcoins comes up, tests, and holds a support, that marks the beginning of a bull run, and that's exactly where we're at now.
Yeah, I think we're in the very early stages of a bull run. I think in the next couple years, it could change your life. If you have the tenacity and the guts to ride through this thing and all the crazy swings, I think you'll be rewarded by November 2025, and I'm hoping to be retired by then. So
yeah. I think, like as far as time frames, I've been looking at that Benner cycle theory. I don't know if you know what that is, but basically it's basically been around since 1875, and it's a chart, right? But it shows you these market cycles, and if you come in here and you look at like what happened in 1927, Great Depression, 1945, World War II, 1965, the Dow tops out for 10 years. 99 dot-com crash to 2019, that was the 3 months later you had COVID, right? So these are years when it's pandemonium, right? But we just came out of a bottom year, 2023, where it's years of hard times, low prices, and good time to buy risk assets, right? So the question is, when to sell, right? And then that's where you look at this middle line, and this has typically been a good time where prices are juicy and time to take some profits. So
that's 2026. Why is all this stuff lining up? It's too crazy. Like we were just talking about November 28th, 2025 being the likely top of the market, and you got over here 2026 is looking like the top of the market of periods when to make money, adjusted all the way back before the Great Depression. That's pretty insane, don't you think?
It's so amazing, bro. And I think, I don't think there's anything new under the sun, and human psychology is always going to stay generally the same. People are going to be scared of missing out, and they're going to be scared of things dropping. So you basically use that fear to your advantage, and you just, you make it your own.
Yeah. Fear and FOMO really moves the market. It's really just a measurement of emotion. Remember, just like the Fed Bostic thing, he said pause in like walking by a reporter, and the market went ballistic. The S&P is still, we should be closing here. The S&P is still going ballistic. Bitcoin followed, and we even got a candle in Hex. So like it's all emotions that drives this market. Yeah. So I really hope that we don't have that big correction, but if we do, I'm ready to buy some up. I think if we break through 25, like I don't really care about Bitcoin. I do have a nice stack of HODL position that I'm trying to retire on later on. I'm not touching it until like 2028, but I don't really care about Bitcoin, but Bitcoin really it moves the market. Things are pretty correlated with it. So if we break out through like 25K BTC, I'm full bullish. Like I'm just going all in. Like I said, I still have a lot of dry powder from 65K. So
when we do that, and we break that 25K level, like that, remember that green line on the golden ratio, that is 39K. So like, yeah, that's why this is taking so long to build up. And you're actually seeing bearish divergence on this because the relative strength is going down, but at the same time, the price is going up. So there's nothing saying you can't get that spill down to 22 or 21 or 20, but those are definitely opportunities before then you do get this nasty rip, right, to 39.
Yeah, I actually wanted to show that. Thanks for reminding me. I'm going to steal the screen just for 2 seconds. This is some pretty gnarly bearish divergence. And I do have the clip of when I sold the top and why I did it. But it was because of this bearish divergence right here. You have to excuse all of this crap here. This is all old. But yeah, I mean, and even this top, check out this. So this is right here is where I sold. And then it even had another bearish divergence candle.
Wow.
And I was like, dude, this is bearish divergence in bearish divergence. Like, I don't know. I'm not saying that it's not going to go up, or because everybody thought 100K laser eyes, right? Tom Brady, everything. So like, I was like, I'm not saying, I was like covering my bases in the clip. I'm like, I'm not saying it's not going to go up, but I'm just saying that I'm taking profits. I went and bought an Audi R8 and did a bunch of stuff, and I kind of vlogged it a little bit, but yeah. So the divergences, the RSI was designed to spot divergences, not to see if the market's overheated, bullish control zones, all that is great and everything, but it's designed to spot divergences. And the old adage does say the markets can be irrational longer than you can stay solvent. But I will say, dude, this is pretty gnarly right here. Mm-hmm. I definitely, if we do roll over, if we do see that big push, if we actually see a proper swing low in the market, right? I mean, this is still technically a swing high in my book. Yeah. We actually come down here and get a proper swing low. That is a buy, in my opinion. Yeah. For 4-year cycle theory as my base case. But yeah, I mean, if we kept pumping through here through 25 on more bearish divergence, it wouldn't feel as good to me and as clean to me as if we kind of just like finally kind of flushed down, scared everybody, got confluent, and then push through 25. Holy
yeah. Dude, that would be respecting the TA, as if we did get that flush down, and what it would do is it would make people flip bearish before then really start kicking this thing off. And that would be ideal. And that's why I kind of think that we might not get it. We might not get it.
Bro, so we only have 8 minutes left. So I definitely want to ask you your PulseChain, PulseX rollout strategies. Like, what are you doing with your hex? What do you think is going to happen when the PulseChain actually goes onto mainnet? We have copies. It's going to be pure chaos and excitement. What do you think is going to happen with eHex? What do you think is going to happen between pHex and also PulseChain, PulseX?
Well, I think this just playing by the numbers. I think PulseChain is going to be the thing to acquire early on because 40,000 people have it and the rest of the world doesn't. So people are going to be taking their hex liquidity on the PulseChain side and swapping it into like either PulseChain or PulseX. And I tend to think that 140,000 people, so about 3 times more people ended up putting it into PulseX. So then that will also see some price stagnation early on. But essentially, I think your PulseChain coin is going to run hard right away because of a necessity to acquire it. And then when that gets a little bit top heavy, then maybe that money flows back into the pHex and PulseX.
Yeah, that's basically what I'm doing is if we're fully bullish at the time and I have no more dry powder, I'm going to take a little bit of profits on a hex so I can pump it into the system once the bridge goes live. But as you know, like the bridge isn't going to be live. It's just going to be trading against itself. So I'm looking for opportunities. People ask me like, dude, what are you going to do? Well, I can't really tell you because I don't know what's going to happen. If there's an opportunity, I'm going to take it. If there isn't one, I'm going to stay exactly where it's at. Remember Occam's razor, the simplest strategy is going to be the best one because there's less points of failure. So like if I know a lot of people, I believe the narrative once V3 is live is that if you want in early, get hex. I believe that's what the narrative is going to be. Okay. So if that's the case, that means we're going to have a huge sell-off in pHex into PLSX as people really want PLS, pHex into Pulse. And also a lot of latecomers have the same strategy with PLSX. So since I got in day one, I'm looking to buy juicy dips on pHex and PLSX with 10% of my PLS portfolio. I also did PLSX too, but I just want those big discounts. And I want to on-ramp dry powder just in case we have some kind of crazy meltdown when the bridge opens and people want to bail and all this stuff. So I can buy that. When Hex came out, it went to like a Satoshi. Mm-hmm. So like I didn't buy it that time, but like I was watching it and it's like, dude, what if PulseChain does the same thing? That's how you get that 10,000x. You know what I mean?
Yeah, and I think you're right on point about that. Like we can actually draw data from Big Payday where you dropped 86% after that 30% increase in inflation. And so if you got a similar move, basically what we don't know is how high is Hex going to run going into the mainnet launch. But then if you just want to use past history is, you know, typical performance, and look for that 85% dip.
Yeah, and I do have a little bit of a speculation. You know, mental masturbation prevents blue brains. That's like, I do have some speculation as to when we did when I did the sacrifice, we were kind of under the impression that like 2 weeks after the sack, that PulseChain was going to be live, and I believe that crazy run up from 13 cents to like 50 some cents was speculation on that PulseChain.
It was.
I don't want to get people too riled up or excited or anything like that, because I don't want to ruin your life if shit goes wrong. But a similar run up like that is possible, or bigger, because the reason I say that is because Hex has a lot more eyeballs and a lot more exposure, and people are watching a lot more than back in those days. Back in those days, everybody, like, people just ignored it. You know, it's like I would say it's the North Korea of crypto. You know what I mean? But now people are watching it. You know, you got BitBoy talking about
number one pair right now on Dex Tools for volume.
Yeah, it's high volume, and it's one of the biggest movers. I always say, you know, don't fight the take. You know, like, if the market's going to show you what the big movers are, and it's one of the biggest movers of 2023. So for this next bull market, the market showed you during that January FOMO rally which ones are going to be the actual movers, you know, inside this next bull market. And Hex was like one of the top 3 in January, like top 4.
You can always project how good a coin is going to do based on how it comes out of the bear market. And right now, Hex is leading the way out. And so this is any indication of, right? If this is any indication of what we can expect going into the bull market, we can expect some pretty insane returns. This is 375% off the wick high from the wick low.
Yeah, 375%. Yeah, so almost a 4x already off the lows. Yeah. So yeah, I mean, there you go. The market's telling you, the market showed you what is going to be the big movers. It's AI, it's Hex.
Yep, and I agree. I think meme coin narrative's dead. I think AI is the thing that's going to replace meme. Yep,
I do too.
And so the other thing too I wanted to say as we're wrapping up, dude, is I 100% appreciate your based and somewhat bearish leaning takes. And believe me that I'll be listening to you once the RSI gets overheated on a lot of these things in a year or two. I'll be coming to your channel to listen to get that perspective. Yeah. So I appreciate you, man, for bringing me on. It's really been a pleasure.
Yeah, man. Dude, I respect your TA. You're like, you got a lot of data, and I'm a data fiend. So like, without much props, much respect to you. And yeah, man, look, sometimes I'm known to say shit that people don't want to hear. You know what I mean? But that's also how I sold the top. So I don't want to lean bearish and say, oh, we're all going to collapse. But I think in terms of probabilities and not certainties. Okay. So I think the probabilities are a little bit higher right now that we roll over in the next couple of weeks, but I'm okay with that as I'm going to deploy. Okay. That doesn't mean that's exactly going to happen and sell everything, but it's just a real blunt approach to it. And so good luck to all you guys. And thank you, Access, for coming on, dude. I appreciate it. And like and subscribe.
I was just going to look at the longs here, longs to shorts. Look at this. Let's see what we got. It looks like there's more longs and shorts, so it's actually setting up for a long squeeze potentially.
Yeah, dude. I wouldn't be, man. It just looks dumpy, man. Like,
yeah.
And the overall
one final puke, maybe, before, you know, that's the chance to buy. So, anyways, guys, this is bullish, man. This is even though it looks bad for the guys that are in, it's bullish.
Right, dude. And don't, but we're overall macro bullish, like long term as far as crypto's 4-year cycle. But guys,
don't be selling your positions.
Yeah. So remember, you don't want to sell. You don't want to sell here on this breakout confirmation. You don't want to sell. That would be like on the last bull market. You're like, holy fuck, I'm up like whatever, 50, 60 grand from here to here. Okay. But you sold here and you know, like now you're chasing. It's ugly. It doesn't feel good. And the last thing, if it does correct heavily, don't start having shaky knees. You got to be, you know, you got to like be decisive, and you got to strike. But anyways, do you got like 2 more seconds? I did ask people to ask questions.
Yeah, I got time.
So let's see. Can we touch on Hex scarcity? Remove OA. Okay. Can we touch on Hex scarcity?
Yeah, that'll be a quick one. Hex. So okay, this is the data that I have, and I'll just read it off to you. Basically, there's roughly 16 billion liquid Hex, right? But 6 billion of them, and this is in the user supply, right? So take out the OA, take out any other, you know, big bags that are never going to dump. There's basically 16 billion user supply that is liquid that could be sold in the market, but 6 billion of those coins have been dormant since like the beginning, right? So that leaves a remainder of only 10 billion coins, and at 7 cents, that's roughly $700 million. Well, we did $97 million in volume in January, and from January to February, so
That's
mid-February.
insane.
So we already we did 1/7 of the total supply and volume, which is why you're going to need to entice. And when I say you, big buyers who want exposure, we're talking like the BlackRocks or the Coinbases or the Binances, or like ETH Genesis whales that don't have exposure yet, that would rather see huge returns in Hex versus sitting on ETH for a 5x. Those guys are the ones that are going to basically have to push the price up and entice Hex OGs to sell part of that 10 billion liquid supply, or to emergency and stake and get that supply back into the hands of the many, right? This is what these redistribution cycles are all about. Is it's taking many coins out of few hands and putting a few coins in many hands, right? And that's what creates these huge parabolic run-ups. So with that, yeah. What else we got for questions here?
What happened?
I don't know.
We got rugged.
I looked up, I was like, what the?
Damn, dude, I really wanted to actually hear that. Dude, man, you're a beast, bro. Good job, man. Wow.
Yeah.
Okay.
So that's a shout out to Crispy Man. Okay, if you guys want to find that data, you got to go check out this guy's website, hexfire.io. I'll put the link in here. Hexfire.io. This guy goes in deep on the chain. He knows all the data. We talk regularly, and the amount of tools that I've been able to ask him to build, and he builds it within like 3 days, is just incredible. Like, I have so much perspective on this contract that I do believe that Hex is going to exceed everyone's expectations in the next cycle. It's going to do something that everyone thought was impossible due to what I know about the circulating supply, the liquidity, anyways, I gotta hold some back, but yeah, it's looking really, really good for Hex.
Assuming you have, and I don't know what happened. Was I still here? Because I got completely booted.
It pulled down your camera and your mic.
Okay, yeah, I totally had to reset everything. Just a couple more quick. Assuming you have equal Hex plus X, what is the ratio you would swap PLS for Hex?
I don't know how you feel about this question, but I fucking hate this question. And the reason why is because it's like, bro, it's like we all didn't get enough Pulse and PulseX. So the easy answer is get some of it, right? But like, I think if you can be long-term minded and look out like 2 or 3 years, money's going to flow. You're going to see huge returns in Pulse and PulseX, but the money's always going to flow back into Hex. And that's because that's the store of value, and it's tied to that yield-bearing asset called the T-share, right? And that's the most important element here, right?
Yeah, and also this whole ecosystem revolves around Hex. It's like, I always use the analogy, every road leads to Rome. Well, every like project that's currently all the blue chips, first movers on PulseChain, they all lead to Hex. And Hex is really the center, the heart of that whole community, no pun intended, but it really is. So I think it's going to be still the most important thing. And I'm planning to have both eHex and pHex after the fork, because I'm not sitting here thinking that I have like a crystal ball and to know which way it's actually going to go. The markets are crazy and irrational, but I'm definitely leaning more towards eHex as like what I'm more coveting, just because I've been so long into this. I've been here since, listening to Richard since 2019. And it's like, I just have a more connection to it, to the eHex side, but who knows?
Well, and we just have the reality of like it's a numbers game, right? There's 9 million wallets on Ethereum that are using daily that have $100 or more in their wallet, right? So it's an instant liquidity on the most used, most popular EVM in the world in Ethereum, right? And think about it like this: the faster money doesn't always perform the best, right? The slower, clunkier, more expensive money to transport is usually more expensive. So like in the case of Ethereum Hex, gas fees are going to go up. People are not going to be able to end their stakes. It's going to get heavier. The OGs are going to be swinging their dicks, being like, "Look, I got 100 million eHex. I'm never selling. I can make yield off this $1 per hex thing forever." They're going to be trading it. Like, you're going to be having large players coming in to get exposure. Genesis whales can get higher returns than Hex over there, versus pHex, where it's a faster, more efficient chain. But a lot of the little guys are going to be going over there, and like there's not really a bunch of little guys. Isn't really enough to really move the prices much over there, and a lot of that money will be chasing 100x's and 1000x's in Pulse and PulseX. So I think originally, you know, you're going to have EHEX is going to be the OG crypto, like the OG ERC20 store of value that all of the ecosystems across all the EVMs are going to seek, right? And that's a function of, it's like, think about it like gold. Gold is heavy. It's hard to cross borders. It's hard to transport. It's expensive to move. And then, you know, eventually the price slows down, right? In the case of gold, that's been around for thousands of years. Well, that's essentially what's going to happen to Hex. It's going to have these huge moves, take it to dollar plus targets. And then you're just going to have this event where the guys that got in early can milk the system for 180-day stakes or 90-day stakes, and it's going to be profitable, and there's going to be so much demand over there, right? And then eventually PulseChain, PulseX, and PHEX are going to have to play catch up and try to take some of that market share away from Ethereum.
I think it's going to become a little bit of a meme as well. It's going to be like, well, I got OG like EHEX because I'm OG. I've been here since the beginning. I went through big payday. I went through the 2 years wait and stuff. And it's going to be like a flex kind of be like, yeah, dude, I got like all my shit in EHEX, you know. Also, ETH could like do something for their fees. I think their next update's like LSD or something. I haven't really done a whole bunch of research. Is that right? Or is that a troll?
Is it Shanghai?
Shanghai, but after that. So you have,
I don't know.
yeah, the next one's going to be like LSD. I think they're going to focus on fees and stuff. So that can be solved maybe someday. Okay. So, but yeah, anyways, I think it's going to be like a flex.
The way I look at it too, again, don't forget, is like you can ride the wave up on this cycle and on Hex and get many more Ethereum back, because Ethereum, Hex is kicking the shit out of Ethereum. I don't know if you ever look at the Hex BTC or the Hex ETH chart, but it's totally obliterating like the ETH BTC chart for comparison, right? Because if ETH is a utility token or the oil that you need to run your car, and Bitcoin is your store of value, that dynamic is the same in that Hex and ETH, right? Like Hex is your store of value token. It has a pump of metals built into it, and ETH is still the underlying utility token. So I think the upside, you know, in the dominance of the market is there. The potential is there, and it's showing itself in those charts where you're up 200, 300% against the blue chip cryptocurrencies already just this early in the cycle.
Yeah, I agree. But as far as like the ratios, like the original question, you could kind of do something. Look, you don't really know because neither of these have value, you know? So I guess one way that I was looking at it, and it's kind of like a Hopium Moonboy thing, but you know, I'm looking at Ethereum, you know, it's kind of the bottom of the bear market. Its market valuation is what, 200 billion. You know what I mean? So like, and Hex is diluted by 10,000x, right? So at 1,500, that's a penny and a half. You know what I mean? That would be like a top target to be like, dude, ETH at the bottom of the bear market, a penny and a half, dilute that by 10,000x. Does that make sense to you? Or then like, or a lot of times some of the L1s and like these new blockchain projects and stuff, I noticed that like in the bull market, they top out at like 50 billion, you know, so that would be like what, divide that by 4.006 something, like a sixth of a penny or something like that. Some like initial crazy targets, and then maybe do the same. You know, you can look at like the Uni token and kind of do somewhat of a ratio between Uni and ETH and project what you think is going to happen. But essentially, you could get nerdy like that. But really, if you see everybody just dumping the fuck out of PLSX, get some. You know, that's simplest is better.
Yeah, once the ratio starts to exceed like 8-to-1 or 10-to-1, like I think Sami goes on about this, is like put some of your pulse back into it. Like, so typically, what you want to do is you want to go look at the Ethereum chart from the beginning and kind of see what it did for price performance and try to model out what you think PulseChain can do in a similar time frame. And then maybe you'll just watch those charts play out over time, or you'll watch the PulseChain chart and see if you can kind of find a correlation there. And then once you see it start to hit overvalued ratios like 8-to-1, 10-to-1, maybe then you start flipping some back into PulseX or PHEX. And then with that, what was I also going to say about it? It escapes me now.
That's okay. We're kind of over budget here on time. I got to try to keep it under an hour. People aren't going to watch, but I just want to thank you again for coming on the stream. That was pretty awesome. Definitely one of my favorites so far. So,
cheers, man. Appreciate you.
Wolfpack guys, you know, give this dude a like, a follow on Twitter and on YouTube. Yeah, he's a good dude. So I'm really not good at the formalities, guys. Like and subscribe to this guy and me. Okay, I'll see you next time.